Welcome, everyone. Today, we're diving into affordable housing investing that allows you to grow your wealth and create meaningful impact by building stronger communities and solving housing challenges. It is top of the hour, and I do want to be respectful of your time, so let's get started. I'm excited to welcome our speaker, Joseph Kimbrough of APX REI Holding. He's a real estate professional with expertise in affordable housing strategies. Again, he'll show you how to align your real estate portfolio with purpose and maximizing profits. Welcome, Joseph. Thank you for being our speaker.
Thank you for having me on.
You're certainly welcome. Before I turn it over, I do want to give you a general overview of how self-directed IRA works. If you have questions, you're welcome to put those in the question box. We'll answer as we go. Any remaining questions, we'll definitely allocate time to get those answers for you as well. I'm Reneika Lightbourne with Advanta IRA as a business development specialist. I've been an employee of Advanta since 2019, but I'm also an Advanta IRA client prior to joining staff. So self-direction is something that I advocate both personally and professionally. After today's webinar, if you do want to do a one-on-one consultation, you're welcome to give me a call or send me an email. You can most certainly go to our website and schedule some time with me there as well. Just a quick disclaimer before we get started. Just know at Advanta, we don't give any tax, legal, or investment advice. The information that's going to be presented today is just for educational purposes. As always, we encourage you to do your due diligence. You want to consult with your professional team, like your CPA, financial advisors, attorneys, and so forth, before making any investment decisions. Just a quick takeaway, if self-direction is a new concept for you, just very simply know that any IRA or former employer plan qualifies to be self-directed. The beauty with self-direction is you're in control always. You get to choose what is it that you want to invest in. Today, we're focusing specifically on real estate. And just know that any income that's generated from that investment flows back into the IRA. If there's any related expenses, it's paid out of the IRA. Just a little history about Advanta and who we are. We've been in business for 21 plus years now as the leading self-directed IRA administrator in the business. While we don't give you any tax, legal, or investment advice, our team is comprised of attorneys, MBAs, financial planners, and also certified IRA service professionals. Our headquarters is located in Clearwater, Florida, the Tampa Bay area. Advanta does have an office in Atlanta, which is where I'm based, but we do work with clients nationwide as we have a little over $3 billion now under our administration. Our focus is providing you concierge-style service where every client with us have a dedicated account manager who's with them for the life of their account with us, but also to providing you great educational content that have experts and practitioners such as Joseph come in and knowledge share with you. This webinar is recorded. It's going to be uploaded to our YouTube channel. It's going to be uploaded to our website, our video library. You can always go to our website to register for upcoming or future events. If there's a topic that you're interested in, and we're open to suggestions. We also have a podcast that's hosted by my colleague, Alex Perney, and of course, our blog that features anything and everything related to self-direction. So exactly what is a self-directed IRA? Just very simply, self-directed means that you as the account owner, you have complete control over your retirement funds. You have complete control over the investment decisions. You get to really diversify outside of the traditional stock, bonds, mutual funds. Again, we're focusing on real estate, but just know with self-direction, it's near limitless. Pretty much the IRS have a long list of things that's available to you. The only two things you cannot invest in is life insurance and collectibles. Outside of that, you can certainly look to use IRA funds to invest in private equity, precious metals, cryptocurrencies, single member LLCs, and so forth. As it relates to real estate investing can mean many things for many different investors. For you, your strategy might be single family home, whether it's a rental, a short-term or long-term rental, or you can do a fix and flip project. You can certainly look to use IRA funds to invest in mobile home parks, or you wanted to do storage units, tax lien, tax deed investing. You can do REITs, you can do commercial or multifamily units. So essentially, our real estate is pretty broad. Why do people choose to self-direct? This question typically comes up when I'm talking to somebody new. It can be a new source of capital for you. So instead of tapping into your rainy day fund or taking out a bank loan, if you have funds that's sitting in an old 401k or an existing IRA, you can elect to move a portion of those funds to do your next deal. The ups and downs in the stock market, the volatility, we have no control over it. Something overseas can impact the stock market here. Whereas with real estate, it's a tangible asset. It's always going to retain value. You can elect to, again, diversify and and hedge your bets of sorts. And then, of course, the tax benefits, having those rents, those profits, those dividends flow back into your retirement account, tax-free or tax-deferred, depending on the type of account that you have. In terms of the different types of accounts that can be self-directed, it's the ones that you're already familiar with. So if you were to go to the IRS website, you don't see the term self-directed. It just means that, again, you get to decide which one to invest in. But for individuals, you'll have a traditional IRA or Roth IRA. With traditional, you elect to pay the taxes, you defer, get the tax break up front, you pay taxes later. Whereas with the Roth account, you decide, you know what, I want to pay the taxes now, grow that account over time. As long as you've held that Roth account for 5 years, the distributions would be tax-free once you reach 59 and a half. For small business owners, if you have a side business or self-employed, you can self-direct a SEP, simple or solo 401k. Solo 401k has greater flexibilities. It's very attractive, specifically for real estate professionals. So if you want to know more about that, again, you're welcome to schedule some time with me. Some lesser accounts that can also be self-directed that are just as important are educational savings accounts. So if you have kids, grandkids, and you want to be able to cover their educational expenses, you can do so. And then, of course, medical and an HSA, a medical savings plan. So if you have a high deductible insurance plan, you can be eligible to self-direct an HSA. You do want to check with your plan provider. The key thing to remember is if it's a former employer plan, you can certainly move those funds. There's no issues there. If it's a current employer and you're not 59 and a half, then that's typically where you would have restrictions. If it's an old employer plan or existing IRA, you can move it at will. There's no issues there. In terms of funding the account, there's several ways you can fund. If you have an existing IRA, let's just say you have an IRA at a Fidelity or Charles Schwab, you can elect to move as much or as little as you need to make those investments. There's no tax liabilities for you to do that. In that scenario, Advanta would reach out to the other custodian on your behalf to move whatever dollar amount that you specify. You just need to make sure that it's whatever amount you do want to move, it's in cash, it's liquid. If you have an old employer plan, whether it's an old 401k, 403b, or TSP type plan, you would actually have to initiate that request. We'll guide you through the process, but you essentially would have to reach out to let them know you want to move X amount of dollars over. You're not taking a personal distribution. It's just simply going from one retirement account to the next. And then, of course, you also have the ability to fund your account by making an annual cash contribution. As long as you have earned income. So for 2024, you still have up until obviously tax deadline, April 15th of next year to make your contribution for 2024. But with a traditional and Roth IRA, you can contribute. If you're under the age of 50, you can put in $7,000. If you're over the age of 50, you have the additional $1,000 where you can put in up to $8,000. For SEP, simples, and solo 401ks, again, you have higher contribution limits. So for example, for SEP IRAs, you can contribute up to 25% of your earned income, not to exceed $69,000. Same thing with solo 401ks. Essentially, you're contributing as an employee, and then you get to match as an employer. So for solo 401ks, $69,000 if you're under 50. If you're over the age of 50, you have $76,500 that you can possibly contribute. And then for ESAs, it's $2,000 per year per child. With an HSA, again, having a high deductible medical plan. For individual plans, you can put in $4,150. As a family plan, you can contribute $8,300. But you also have the ability, if you're 55 or older with an HSA, you can contribute an additional $1,000. The process is pretty straightforward with us. We've really streamlined that for our clients. To open up an IRA account, you can go directly to our website. It'll prompt you to fill out the application electronically, or you can reach out to myself or one of my colleagues and we can walk you through it. But essentially, we'll get your account open within 24 to 48 hours, business hours, once we have your completed packet. The next step is funding your account. So whether it's a combination of making an annual cash contribution, transferring from an existing IRA, or doing a direct rollover from an old employer plan. And then finally, step 3, what is it that you're interested in investing? Is it real estate specific? Is it, affordable housing related project that Joseph will talk about? Or is it, precious metals or so forth? But essentially, you have the ability to use your IRA funds to invest in a long list of different things. And with that, I'll go ahead and turn it over to Joseph.
Well, first I want to say that I'm very grateful for being on this webinar here, speaking with everyone. And so we're going to go into what it looks like to invest in affordable housing and to impact the community in a positive way while you're doing it. So why invest as an LP in affordable housing? One, it addresses a growing demand in underserved markets. Another, it creates sustainable, impactful, impactful community benefits. It has sustainable and impactful community benefits, and it also can generate reliable returns for investors. So, just to go over what I mean by addressing the growing demand in underserved markets, something that I noticed this past year and last year is that the demand for affordable housing in America has increased. And for me, I noticed that just by talking to people. Now you see different things where people are like, look, like rent is too high at this point, rent is increasing. A lot of people complain about these things. So this is a great solution. And then I met some partners, and we started working together. Excuse me.
Just a
Now the
question,
idea.
go ahead, I'm sorry.
Oh, what's the question?
No, I was going to say a question popped up in terms of like what current market trends are you seeing? Is it specific to regions or just your general area? I think you're based in Texas or?
I'm based in Dallas, Texas. So with all the people moving into Dallas, Texas, you can most definitely see where affordable housing is needed because naturally when the demand for people to come into an area is higher, the rents start to increase. So the people who are naturally local to that area, they're not necessarily accustomed to the rents being as high as what they are. And so you would naturally hear them start, like, hey, all these people moving in, making comments of that sort. So in Dallas, Texas, affordable housing is definitely needed. Austin, Texas, San Antonio, and affordable housing doesn't always go towards low income either. So just to understand some of the needs for affordable housing, this goes into what I was speaking about when I said it's not just low income housing, even though that's what a lot of people think of when they think about affordable housing. You have an increasing senior population, people who are going to be retiring. Naturally, when a person retires, they have they have a fixed income that they have to live off of. So populations such as like the 55 plus housing, that's going to increase in demand. You need communities like that, whether it's an apartment building or housing community. It's very much needed for them because it can help them get through with that fixed income. Also, the rising college enrollment. So, for example, putting affordable housing next to a college, a university, that's great for college students. I mean, a lot of college students are have limited income. I don't know. I know when I was in college, I didn't want to stay in dorms, but at the same time, I couldn't necessarily afford to stay in the apartments that was nearby. So if I had known about more affordable housing projects during that time, this would have been an option. Also, affordable housing for low income. Again, people can get priced out of they can get priced out of a place to live just by the demand on that place that they're living in. So back to the example of a bunch of people moving to the Dallas Fort Worth area, that puts a demand naturally as an operator. You're going to increase rent because if these people are coming in and they're willing to pay a premium on rent, why would you not charge it? So that creates a need for affordable housing. Were there any questions on that?
So one question that came up is what type of properties qualify as affordable housing? I know you mentioned a couple different sectors with, student and then the aging population. So it's not just strictly, low income, residential. It can be a multi-unit property. Is that correct?
Yes, and affordable housing also doesn't have to look like affordable housing. So the group that I work with, when I met them, that's one of the things that I told them about when they brought this to my attention. It's like, hey, we're doing affordable housing, ground up development. So I was like, look, I don't want to be a part of anything that looks like affordable housing because I don't believe people should have to live like that. But they ended up because my mindset at that time was thinking low income units. but they show me how you can literally put together a student housing apartment building that's rent controlled. It can have 4 clubhouses. It can be 300 plus units, and it looks like a nice building to live in. And so I was like, wow. So that is what our focus is.
Okay, another question that just, yes, another question that just popped in is, please ask what grant, oh, I'm sorry. So it says, what grants and other funding will supplement necessary capital to build affordable housing? If none, the return on the investment to investors will be very low. So they're asking you like if there's some supplemental grants that you guys, go after to kind of help with offsetting the cost of building.
Yes, we do have supplemental grants that we go after to offset those expenses and things. Now we how can I put this? We also get tax credits. The government is open to giving you tax credits for that as well. Now, if
Okay.
I can go into more detail, but then that goes into like our actual strategy behind why a lot of these projects are very profitable, in which that would be a conversation more offline.
Okay, he has a follow-up question. Are there supplemental grants, federal or state? So if you have a high level, you can want to share, but he's asking, are the supplemental grants
You can
federal or
get
state?
federal, you can get federal and state.
Okay,
There are some that's federal and state.
okay. Another question that just popped up, and you'll probably touch on this, is what kind of ROI is expected for your investors, for your money investors?
This is something I'll definitely touch on, and I'll even show at the end of this here a cash flow sheet of one of the projects that we've been on.
Okay, thank you. Yeah, keep the questions coming in. Joseph, you can continue as they come in, I'll ask.
So this is going into my partner. So we've partnered with an experienced developer. This guy's been doing ground up developments for the past, I would say, 12 to 15 years, and even have a faith-based initiative for the projects that we do as well. And as far as when it comes to details on that, what the faith-based initiative looks like, working with people on that, that's another offline conversation as well. So we target markets with high growth potential and a need for new development. So places in Dallas, places in Austin and San Antonio, we really stay in Texas. We don't look outside of Texas. Also, we leverage the tax incentives, HUD loans, and also there's government programs for low income housing investments or rent controlled housing investments.
One question that came in is, how does the population growth impact your demand or your strategy for building?
Yes, so how does it impact? Ask that question one more time.
Are you looking at population growth based on the projects you guys decide to invest in? So the question is relating to population growth impact.
Yes, definitely. We definitely look at population growth in the area. Like, for example, going back to the Dallas-Fort Worth area, when you have a high population growth, the chances of a ground development deal being profitable is higher because that's more people coming in that need a place to stay. So we look at the population growth in areas as well. So this is making a difference in the communities. So with the 55 plus low income housing, we're providing seniors with affordable, safe, and dignified living options, also reducing the housing instability among the aging populations. So this goes back into what I was saying earlier with it being more than just low income housing. It also goes into senior living. It goes to student housing. And there's other forms of affordable housing as well, but we don't really step into those. And there's a bunch of options. Like I've seen where you can put low income housing in one part of a building and then even add a hotel hospitality for the other part of it, which X number of units. And that's another way of attracting more people into the area as well. You can do affordable housing with historical buildings also, and local governments love that.
Question relating to the 55 and plus housing. Are you partnering with senior living facilities, or are you guys building for them? Is it a partnership? Like, how is that structured?
we build for them, and then we structure it that way. We build it from the ground up. So we'll get land, and that goes into the faith-based part again. So that's what I was saying. On the faith-based part, let's say, for example, you might work with a church. They have an aging population. They have land. You build on the land that that church might own, and now you're providing housing. And it's for multiple people that can move into that. So it might be 80 units, it can be 100 units. And I have a few different examples of that.
Okay, a question that just popped up is, what typical monthly rents would you charge for a 55 plus student or low income housing? Do you have like a breakdown of what you guys typically charge for those types of units?
That's a good question. It depends on the area. That's not like a one shoe fits all. So it depends on the city that you're in, the state. What are the average rents in the area? What's market rent in the area? So you want to charge below market rent. Yeah, so it's a lot of factors that go into that.
Okay, thank you.
For the student housing, here we support academic success by ensuring the students have access to affordable modern housing near campuses. Now, students definitely need to have affordable housing as well, because again, like I was saying, when I was in college, you're not necessarily making money while you're in college. I mean, unless you have like a job, a high paying job, but not many people have high paying jobs in college. So affordable housing is very needed for that as well. And then
Okay.
also
Go ahead, I'm sorry.
and then also for the low income housing, this addresses like a housing shortage for working class families and individuals. Something like I would say within here in the U.S. where blue collar workers, working class families, they don't always make the money to be able to survive at market rents or market rates. So this is something that's also needed to decrease the amount of homelessness that is in the areas as well. So we contribute to local economic development by stabilizing the communities, which again, that's basically just saying we're reducing homelessness. We're reducing families that get affected by not being able to afford the rents in areas.
Okay, a couple questions that just popped in. It says, I think you mentioned that you guys only focus in Texas, but he's asking, what cities are you planning to do this? Like, or have you done this? Or is it, you mentioned Dallas, but can you highlight the cities once more?
Yes, so the Dallas-Fort Worth area, Austin, Texas, and San Antonio, also Houston.
Okay, any plans in the future to expand nationwide, or are you just perfecting this model in Texas?
We're really perfecting this model in Texas right now, and then we do have plans to expand into other states as well. I've been in touch with some people in Florida, but again, like we have so much that we're working on here in the Texas market that we'll have to get to that. We'll have to get to that.
Understood. The next question is, what is the minimum size? Like 40 units, 35,000 square feet? Like, what's your size in terms of build that you guys construct?
So 80 units really is like the minimum. We prefer like really to get over 100 units. And I have examples of stuff that we're doing right now, but again, that's more of a conversation off the webinar.
Okay.
You'll be able to see. But we can get up to about 1,000 units, I would say.
Understood. The next question that just pops right in, it says, what rents would you charge in the cities you've mentioned, like the Dallas, Fort Worth, the Austins, and so forth? Do you have an example of what you've charged, or what you would actually charge, let's just say in Dallas, Texas?
Yes, so I would say just looking at some affordable housing places, it really is a range. It depends on what part of the city you're in too. So I've seen where some can be as low as 800 to 1200, but that's again, it very much depends on the market. Very much depends on the market.
Understood. Thank you.
Yeah. So why LP investments deliver financial success? So one is steady income. So you have predictable cash flow from long-term leases and government-backed subsidies. And also with the steady income, I would say that we might even hold some of these properties for 10 to 12 years, even up to like 15 years that you might hold the properties where you're getting steady income. Also for the tax benefits, yes. So depreciation, tax credits, exemptions available for affordable housing investments. That is another benefit. You also have portfolio diversification. So I know that a lot of people, they typically stick with just multifamily, but affordable housing offers some diversification with that, with added tax benefits. And then also capital appreciation, potential for the ROIs, the market values, and the rents to grow over time. Now, another strategy that I've seen with some operators is that you can have these here rent control for about 10, 15 years and then turn around, and once that's over, you can raise it to full market rent and sell it off. That's another thing that can happen as well.
Okay, a question that just popped up is for the senior housing, do you also partner with medical?
So we do partner with medical. We partner with a number of people. Right now, we're looking at partnering with an EV company, like to put EVs into some of the units for like the student housing, for example. For some reason, a lot of students like Teslas, so having that in there as well is a benefit. So we're open to partnering with different people as well.
It says, how do you structure your deals with your partners with the church, which, as you know, is not taxed? How do you share costs and profits? Like as as an LP, like how is it split?
That would be more of a question to be answered offline, like with a one-on-one conversation between you and I, or even with my partners and I as well.
Okay. They mentioned like previously, like did you do like, is it 60-40, 80-20? I mean, I guess they can have an offline conversation with you, but any previous projects?
I would say you can say 70-30, 80-20. Those are average structures. 80-20, 70-30, even 60-40, those are average structures. But they were asking more so on how do we work things out with the churches and the profit splits between them. So that's more getting into strategy. So that would be different.
Understood.
Any more questions?
Yeah, so another question just popped in is how much will be your acquisition fee? So if you can kind of expand or explain anything relating to the acquisition fee.
So because we're doing ground up development, we're doing a developer fee, which is typically about 6%. So also understanding and managing the investment risk. Regulatory changes in affordable housing can affect it. So to mitigate that, you want to work with experienced operators familiar with the compliance in those local areas. So that's another thing when I was asking about the question of expanding. Not every state is going to be the same when it comes to affordable housing. So you have to have people that's familiar in those areas that know that. So it's good to work with people they've done it for a while, they're highly experienced. So that's one way that we mitigate that risk. Fluctuations in occupancy. So you want to focus on high demand markets with proven tenant retention. So you really want to keep affordable housing in cities. Like for example, you wouldn't put affordable housing, let's say in Nocona, Texas. And I know most people probably don't know what that is, but I went to school out there, so I'm just using that as an example. And then some cities they don't allow affordable housing. So like Frisco, Texas, for example, there was a time where they definitely was like, look, we don't want this here. So it all goes into knowing the areas. Also, construction operational delays. That's another thing. So you want to partner with established development teams. If you're doing ground up development, you don't want to go and get someone who is it's their very first because it's their very first ground up development. They've never built anything and start working with them. So you want someone that's you want someone that's experienced in that area. That's another way to mitigate the risk with that.
Okay, a couple questions just popped in. It says, what's your exit strategy, or do you stay in the deal long term? I know you mentioned, sometimes it can be, 7, 10, 15 plus years, but it says, what's your exit strategy?
Yeah, so sometimes we might be in a deal 10 to 15 years. And then there's times where it makes sense just to get out of that property as soon as possible. So for example, there was one where we plan on holding it for 6 to 9 months and selling it to an institutional investor. And you would have gotten about I would say 2x return on that, doing it that way. That's because of the nature of the deal. That particular deal had about 200 million in tax credits or something. So you have strategies like that, or the long-term strategy as well.
Okay, next question is, how much total do you plan to raise from your passive investors for your syndicate? So do you have like an estimate of the amount you guys are looking to raise?
Yes. So with the new fund that's coming up, we're raising a total of 300 million for that one, and there's going to also be family offices that invest with us as well. So this is really just a welcome for people to join us in creating wealth while also building stronger communities. Again, like I said, with these affordable houses, what we focus on is building something that people want to live in, whether it's student housing, 55 plus senior communities, or low income. They will all look like something that people want to be in, and they're not going to look like rent controlled housing. Because naturally you want to build something like that, because like I said before, there's strategies where you can create large paydays for your investors on the back end, where when you've had this here as rent control for the past 15, maybe even 20 years, depending on how long you hold it, then, or even 10, then you can turn around and raise the rents to market rent once things are no longer rent controlled for that particular building, and you can sell it to someone that's going to turn around and do a regular value add multifamily deal with it. So there's different strategies. So this is a way of building wealth long term also. So this just states, be a part of impactful income generating investments and partner with Apex to deliver community benefits and financial returns.
Okay, going back to, just to reiterate, the question came back again. It says, the original question was how much total do you plan to raise from passive investors for your syndicate? I know you mentioned that right now you guys are raising possibly up to 300 million, but then the question came back was how much total? So is it 300 million total? And then is there like a breakdown of how much of that you expect to come from passive investors?
Yes, so we're raising 300 million total. Now, from passive investors, I would say that the minimum investment is 100,000. Now, naturally, there's going to be family offices that might write in, I would say, $30 million checks, or even 20 million, 25 million. This is something that we're putting together. We're putting together the fund part. Now, we also have individual raises as well. But again, for the individual raises, because those are individual raises, I'm not going to speak necessarily on those, but it just depends. Those are lower, those are the like same minimums, but lower raises. But for the fund perspective, 300 million is what we're raising.
Okay. Another question is, do you guys do the property management for the properties, or do you outsource that? Just because the question is, like, how do you mitigate against non-payment? Do you have like a property management service that handles that for you, or you do that in-house?
So we have property management services, but like with low income housing, most times people are not going to pay that because you might have people who are on Section 8. That's not the term for it. That's a different term for it. We don't use that anymore. But there's people who have that, and so you will have how can I put this? Like the government is paying their rent, so they're not going to miss a payment. The government's not going to miss a payment for yeah. But for student housing, yes, we have people who manage it.
Okay. Another question that just popped in is, what trends or what's the long-term future outlook for affordable housing? Like, do you have a, I know you guys focus in Texas, but do you have like a big picture outlook for the space in general? Like, what trends do you see shaping the industry?
As far as trends shaping the industry, I would say that with the increase with the population growth in major cities, affordable housing is going to be something that's needed even more. So cities like Dallas, Fort Worth, like Austin. Austin is expensive. San Antonio, Houston. I would say even outside of the state of Texas, places. I mean, New York is a lot of affordable housing now. We're not going to New York, but you have Florida, you have Miami, you have different places, different areas in Florida, major cities in the different states will need affordable housing. So the outlook is very positive on expanding this out the way we're doing it.
Okay, one question that just popped up is the government federal, state, or local that's going to, I guess, cover the expense? Are you working directly like from a local level, federal level, state level?
So that depends on the project. So with one of the projects, we work both local and federal. And then also we have someone who purchases tax credits. That's part of their yearly the yearly requirement that they have to do to defer taxes. And they're pretty large at that. So we have different opportunities.
Okay, I know you mentioned that you have you was going to share a cash flow or as an example. Do you have that pulled up to where you would want to share with the group?
Yes. So this is the St. John's pro forma. This is a property in San Antonio. This is going to go over 2022. This is the pro forma here. Income, the potential rental income was 2,729,460. We're going over the net operating income. So this is just some of the cash flows here. So, are there any questions on this particular page here?
So this is a property that you guys had since what, 2022, and then obviously you're keeping it through in the projection of where it's at currently in 2024, and obviously what's expected for 2025 and 2026. Okay, and this one you said is in San Antonio. Yes. Another question that just popped up: are there any affordable housing REITs that you would recommend? Obviously, everybody still has to do their own due diligence, but they're saying like, do you guys offer REITs, or do you know of any affordable housing REITs that investors can look at?
Affordable housing REITs?
Yeah, like
So,
the trust.
yep, the real estate investment trust. Those I don't have any contacts with real estate investment trusts. Um, I know that there's some out there. Uh, yeah, but not for real estate investment trusts.
Okay, yeah, it was just something that popped up. Another question, just bear with me 1 second. It says on the Excel spreadsheet, the expense looked lower. Any reason for this? Like some of the expenses is lower. It says, does the tenant pay the bills? Is that the reason why some of the expenses is lower?
Yes, this one, St. John's is a senior. Let me just double check it. Hold on 1 second. This is a senior.
Another question that just came in as well is typically how long does it take for investors to see see results or see returns from their investments? Is it, obviously it's a long-term project, but within 1 year, 3 years, 5 years? Is it, monthly?
So within the first year here, let me go to the other sheet. This is like very basic. I have another sheet to show as well. Yeah, so for me finding partners, how I found mine is I ended up actually uh, partnering with an investment advisory firm and a family office, and they participate in these deals. And so uh, how I got connected with them is through, I would say, an article that I wrote with Forbes Business Council. And the guy has a strong insurance background in cash value life insurance policies. And I was writing an article on how you can tie those into investing into private equity or private debt. And so that's how we connected. And then we decided to do this together.
Okay. Another question is how many partners do you typically bring in on your project?
So we currently it's three of us. Um, it's three of us, and then we're even open to bringing like an extra person who wants to be a GP on some projects, and it depends on the size of the project.
Okay. Yeah. So for self-directed IRA clients, typically IRA clients come in as LPs.
Yeah. So as LPs, yes, I know they asked that question. I was just answering for the question that they asked. But
Mhm.
self-directed IRA clients are going to come in as LPs, limited partners. So this is going over some more stuff with St. John's. This is showing the cap rated sale, which was 5%. The original loan amount here was 26,500,000 at a 5.5 interest rate. This is the valuation at sale.
Okay. Yeah, that's the property you guys acquired back in what, 2022 you mentioned?
Yes.
I'm just going through to see if there's any more questions that came in or anything that I missed. If you have any remaining questions, I know we're getting at top of the hour, so you can feel free to, oh, something else just popped in. Let's see. Can you explain what is it that we're looking at right now?
This right here is the rent rolls, and this is going over some of the rent limits, which answers some of the questions that they were asking. For some, you're looking at $872 rent limit. Yes, 403. So just going here, it's showing some of the rent rolls. So that answers the questions as far as with some of the rents that we may charge as well.
Okay, in terms of, how you cap it or like the current, okay.
Yeah, yes.
Well, Joseph, I appreciate your time, for presenting on affordable housing to the audience. I appreciate your participation and taking the time to listen in. Again, if you have any questions related to self-directed IRAs, you're welcome to reach out to me directly. If you have questions related to affordable housing or Joseph's presentation, you're welcome to reach out to him directly. And with that, I want to wish everybody a happy holiday season. Thank you so much. Thank you, Joseph.